Hello and welcome to the Global Ag Investing Conference here in New York City. We're joined now by Jim Rogers to talk about farmland, commodities and where people should be putting their money in the coming years. Jim, thank you for joining us here.
Oh, I'm delighted to be here.
So let's start with the economy and the economic outlook. You sort of think we're going to be facing a fairly tough scenario in the next coming years?
Well, Michael, every 4 to 6 years throughout the history of America since the beginning, we've had economic slowdowns or setbacks. So I know one is coming. 2000, you can add 2007.
Yes.
So by 2013, certainly 14, we're going to have an economic slowdown again for whatever reason. Next time it's going to be worse than before. You know, in 2002 we had a slowdown. 2008 was worse because the debt was so much worse. The next time around it's going to be worse still because the debt just keeps going up by staggering amounts.
So what could the Federal Reserve, and I suppose more importantly, a new Congress, when it's elected at the end of this year, do if indeed we see this scenario unfold next year?
There are two different groups. If Congress could cut spending with an axe, a chainsaw, and cut taxes, you know, with a chainsaw, and revive the economy, it might cause some pain for a while, but we got to do something. And the Federal Reserve could stop printing money, stop taking on gigantic debts on its own balance sheet of garbage.
So let's turn to commodities in general then. 2011 we saw commodity investor inflows begin to sort of look fairly lackluster according to Barclays data. Is this the top for the commodity boom, do you think?
Well, I can't imagine. You know, the top would have to require a lot of new supply, and I don't know of any new supply or much new supply of anything that's coming on stream. The International Energy Agency points out that we still have known reserves of oil declining at a steady rate. Nobody's opened many mines in the past 10, 15, in the past 30 years for that matter. Agriculture's got serious problems, inventory problems. We have a shortage of farmers developing. The average age of farmers in America is 58, and we've got huge problems facing all of these, supply problems facing all of these areas.
So looking at agriculture in particular then, what's the most interesting market in your view at the moment?
Well, in my view, agriculture, because agriculture is the most depressed on a price basis. Gold is near an all-time high. Oil made all-time highs last year, 2011. The average price of oil was the highest ever. So you can't say that about sugar. You can't say that about a lot of agricultural prices.
Now looking at sort of land, the price of land or price of agricultural land here in the US, I mean, has it got too expensive in the Corn Belt, do you think?
No, well, I mean, you read about the isolated plot of our farm, which boom. Most of that is because it happens to be next door to a farmer who wants to take it into his own, and he can pay more than other people can pay. But no, agricultural land in America has a long way to go, because you have to factor in, at least I factor in, the fact that prices of products are going to go much, much higher. And as that happens, if you base your price or your yield of farmland today on today's agricultural prices, you get one result. But if agricultural prices go here, then your yield is going to change dramatically. So farmland has a much higher to go in my view, Michael, certainly in the rest of the world, especially in the rest of the world.
Right. And let's turn to oil now. I mean, are we in a period of historically tight supply, do you think?
The International Energy Agency says we are, and they're the ones who would know more than anybody else. They point out that known reserves of oil are in steady decline. There may be a lot of oil in the world, Michael, but we don't know where it is, and it may not be cheap even if we can find it. You have some discoveries, but they're nowhere near the elephants, the gigantic elephants which the world needs. America, shale oil is something which is apparently going to come on stream. It may come on someday, and that might end the bull market someday, but someday is still a long way away.
And sort of for the average investor then, looking ahead, I mean, what's the best way to invest in commodities? Should they go through ETFs? Should they look at futures?
Well, if you know what you're doing, Michael, if you know what you're doing, then the best way is to buy futures. You get enormous leverage, and you can just make an absolute fortune in a week. You can lose an absolute fortune in a day, in an hour and a half, if you don't know what you're doing. So that's the best way. But for most people, since they're not very good at that sort of thing, index investing has been proven over and over again is the best way for most people to invest in any sector, including agriculture. But there are many ways. You can buy farmland, you can become a farmer, you can invest in seed stocks which are affected by commodity movements. You can invest in countries. Canada's much better place than the U.S. My own portfolio is mainly commodities and currencies on the long side, and some shorts on the stocks, shorts of stocks on the short side. But everybody has to invest in what they know. You shouldn't listen to me. You shouldn't listen to anybody. You shouldn't even listen to the Financial Times. People should only invest in what they themselves know a lot about.
Well, on that note, Jim, thank you so much for taking the time to talk to us.